So after the fictional on-screen character Dr. Evil, ITC seems to be the most evil thing in the world, looking at the kind of comments and questions that we keep getting and the amount of chatter that is there around ITC. And I don't know, honestly, I'm surprised by the attention that this company gets. There's nothing unique for in this to have so much attention. As I said, instead of the 80-20 principle, this year we have had a 80 and 8 principle, where 8% weighted stock in the portfolio has got maybe 80% of the questions. So I have glanced through most of the questions, or almost all of these questions, and broadly the questions are in the for these points. One is that the stock itself is a terrible performer, meaning the stock goes nowhere but either sideways or downwards, meaning the stock has not gone up in a while now. So why buy such a stock which goes down? The second question is that the erstwhile Unit Trust of India used to be a big holder of ITC, and that became the special undertaking of UTI, which is now a government body that owns a lot of shares of ITC, and they will have to sell the shares. So there is a overhang of supply on ITC. So why do you buy ITC? That is the other broad category of questions that come around ITC. The third category is ESG. It's a tobacco company, cigarette company. A lot of people have ESG mandates, and lot of people will actually be sellers in the stock, and in any case they will not buy such a company. So why are we buying such a company? Their capital allocation is bad, they are building empires, and only the staff and senior management have fun and get high salaries, shareholders get no returns. And then there are some questions on the fundamentals. So cigarettes per se, given the high level of taxation, volume growth has not been there for many decades, and there's no growth in the business. So what's so exciting about this? The other businesses of ITC also, ITC is a late entrant, it's also ran. So why buy the company? So I'll try and address these questions broadly, and in case any point is missed out, or in case there's some significant follow-on question, maybe Rohil or Palak will point that out. So I'll take the point on the stock performance first. So this is the price chart of ITC over the last 5 years. As you can see, over the last 5 years, Nifty has gone up 43% in price terms, and ITC is down 24% in price terms. This is over the last 5 years. So anyone who bought the stock 5 years back is worse off to the extent of 67-68% by owning ITC. So obviously this has been terrible for ITC shareholders in terms of the last 5 years, and that is one place where so much of the pain is coming, and reason why so many questions are there. Even if one looks at over a 3-year period, let's say roughly 3-year period, even then roughly 61% is the extent of underperformance as compared to Nifty. So there's no question about it. ITC stock has done terribly over the last 3 and 5 years. So the question is that, is there something fundamentally wrong with ITC? So will over a period of time Nifty keep growing and someday maybe reach a level of 1 lakh? And will ITC go to a stock price of 0, or will ITC keep falling forever? And stocks do fall to 0 once in a while. So, or many stocks fall to 0. So if a company is very leveraged, we have seen some let's say airline stocks or some fraudulent stocks where the profits were fictitious, or where they borrowed a lot of money from banks and they did some scams and ran away. So in such cases, stocks go to zero. So is ITC such a company where either it will stagnate or keep falling? And I already mentioned that I was quite surprised by the number of questions on ITC, and the reason I'll tell you. Let's look at some past underperformers where on a 5-year basis the stock did terribly as compared to the index. So this is Hindustan Unilever, where there's no ESG concern, hopefully, where there's no uh, government ownership overhang or anything like that. This is from somewhere from 2002 to late 2007, or uh, some 5-year period where the Indian stock markets had one of the strongest bull runs till late 2007. So the index was up 253%, and in that same period, the ITC stock, the HUL stock went down 19%. So underperformance to the extent of almost 270 to 80%. This is HUL. This is not ITC. This is Hindustan Unilever, where there is no ESG problem. There is no problem at all. Again, I've cherry picked this in a way because I've taken this from the peak of the dot-com boom. But this is Wipro, where if you bought Wipro at peak valuations at a peak price, then despite the earnings of Wipro growing in the subsequent years, Wipro was down 68%, and the obviously the index was up in that same period. Index was up by around 21-22%. What I want to highlight is whether it's HUL, Hindustan Unilever, or whether it's Wipro, the past performance or underperformance on a 3 or a 5-year basis does not tell you much about the next 3 years or next 5 years. So Hindustan Unilever post 2007, and please remember 2007 was a period when all the real estate companies, all the infrastructure companies were the heroes, all the leveraged companies, and then you had the financial crisis. Now look at the performance of Hindustan Unilever post that period. Hindustan Unilever outperformed the index by a huge margin, up 97% versus index being down 6.5%. Look at Wipro after that bust of the 2008 and all that. So again, Wipro was up and index was only up marginally. So the point here is that it pains shareholders to have bought an underperforming stock or to look at the past performance and feel scared that this stock keeps going down all the time. What will happen? But past underperformance is not necessary to guarantee future underperformance. Meaning something which is done badly in the past can mean revert. So, of course, one cannot blindly buy stocks which are going down. One has to do basic hygiene check in terms of uh, leverage and governance and things like that. It should not be a company where there's a fraud, but otherwise, something which has gone down significantly uh, may offer opportunities. And I am also aware of people who are either momentum investors or traders and who look at 1-year price movement. And I have done a basic reading of literature on momentum, on academic literature on momentum. So buying stocks at 52-week low typically is not such a great idea. But if a stock has underperformed for 3 and 5 years, actually that's a good idea, because that's when many a times mean reversion comes in because of a long period of underperformance. So mind you, ITC has not gone down just in the last 12 months. It has been underperforming for a long period of time. And we look at the fundamentals and the other aspects as well. But let's park this thought for a minute, we have looked at Lever and Wipro 5-year performance across two different time frames. Again, today when there are a lot of questions on ITC, there is another portfolio stock that we have, which is Lupin. And surprisingly, there are not too many questions on Lupin. So, which is what has been the performance of these two stocks in the portfolio? ITC, we have already seen underperformance by 67-68% over the past 5 years. Let's look at Lupin. Lupin, in fact, has gone down 45% when the market has gone up 43%. So, almost a 88-89% underperformance. So, Lupin, today there are not too many questions for us. Why? Because pharma is in flavor right now. So, since March and April of this year, pharma is doing exceedingly well. So, everything is forgotten for Lupin. No problem owning Lupin because stock is now moving up. So, again, the point I am trying to highlight is don't just look at the past performance and we don't follow the momentum strategy for our investing. So, UTI is coming out with a momentum fund based on a index, momentum index. So, people who are worried about only performing stocks being in the portfolio should select something like that. And there are a lot of websites and small cases and all of that which follow the momentum style. We are not a fund which will only look at the past 1 year return and invest in a stock. We are primarily driven by fundamentals of the company. So this is as far as the price performance goes. Again, another of our portfolio stock. So Ronak is lucky that we are having the AGM in the month of October. If we were having the AGM in the month of May or June, we would have as many questions for Persistent, because till May and June, Persistent was looking like a terrible stock to own. It's only in the recent months that Persistent has gone up like a rocket, and now it seems like a good idea to have bought Persistent with hindsight. So when we are doing these price comparisons, these things are at a point in time and are transient. So one should learn to take these things in one's stride. So that covers the pricing part. Let's look at the argument that government and SUUTI will sell. Now another PSU, IRCTC, which had a IPO price of 320, only a small stake has been sold. Government still owns a very large portion of IRCTC. There seems to be no problem with government ownership, and the stock is at 1,331. So again, these are stories that we tell ourselves to explain something which has happened in the past. I don't think government ownership in ITC is that big a factor to consider when one looks at a buy or not to buy kind of decision. Then people talk about ESG and whether FIs will continue selling or FIs will not buy and things like that. So again, this is from ITC's annual report. There is an organization called Sustain Analytics, which does this ESG rating. So one thing people have to realize is that ITC now only gets 45% of its turnover from cigarettes and tobacco. Rest 55 is non-tobacco, and also uh, a lot of these things are actually positive to society. So they are into a lot of agri businesses. On a lot of the other factors, they are doing good, and they get a medium risk rating on ESG. So it's not that it's a complete no-no or it's a bad company. In fact, people just look at the product and decide whether this is a good ESG company or not a good ESG company. If you have been following the media, recently a innerwear company had a bad ESG rating where labor practices were not good for the company. So it's not a uniparameter of tobacco or no tobacco. You have to look at uh, how are they dealing with the environment, what is the carbon footprint, what is the proportion of renewable energy, what is the board structure and diversity, various factors come in, what is the human rights record and things like that. So don't just have preconceived notions about ESG for or against a particular company. Actually, people who do ESG rating don't rate it that badly. Then a lot of questions are raised on capital allocation and empire building and salaries. So capital allocation obviously in the past was bad because some of the money was going into low ROC businesses like hotels. However, the management has clearly said that they will only complete existing projects and no new greenfield hotel project will be started. And again, they have changed their payout policy where most of the money is returned to shareholders via dividend. So we are recent buyers. We have not held ITC for 5 years. We have only recently bought after this change. So I don't see why we should be apologetic about uh, last 5 year underperformance of ITC. On empire building and salaries, we have looked at the record. Actually, a lot of the other companies pay far greater salaries with far lesser profits as compared to ITC. So I don't see this as too much of an issue. Uh, it's right there, meaning obviously we would like top management uh, of ITC to draw $1 salary like Larry Page and Sergey Brin, but not everyone is willing to work at those kind of salaries. But net, it's not too bad in terms of other areas. It's just that stories are told about these kind of things. Finally, let's come to fundamentals. It's a big chart. Don't worry too much about all the numbers. What I want to highlight is from 2009 to 2020, 11 years, every single year profit has gone up. Profit before tax has gone up every single year. uh, Dividend payout, which used to be 42% in 2009, has gone up to 82% now. So increasingly, capital allocation is also much better. So that's one point. Again, look at the last 5 year data. Uh, Profits have gone up from 9,350 odd crores to 15,300 crores. This is in the last 5 years. And over a 11-year period, profits have gone up from 3,300 crores to 15,000 crores. So that's been the kind of track record of this company. And I have also put HUL, which is another uh, great company. So we look at the comparative tables. I'll just skip this slide. Look at the market cap. HUL is 2.5 times the market cap of ITC, whereas ITC has more than 2 times the profits of HUL. That's the extent of valuation differential. 5 year growth in PAT for ITC is slightly lower than HUL because some of their businesses are newer and they are reinvesting. But actually, sales growth for ITC has been higher than that for HUL. So, surprise, surprise. It's not that ITC is a terrible company either in terms of profit growth or in terms of fundamentals. It's just that because the stock price has gone down, people have started beating it up. Uh, Coming to businesses, tobacco, although it does not grow in volume, it gives profit growth on account of pricing. So, whichever way it comes, it grows profits over the years, as we have seen in the 11-year profit table. The other FMCG business has had a long period of gestation, but it has turned around. It's now actually contributing positively. Agri, there have been a lot of reforms which have been brought in by the government. I think ITC is one of the important players which can benefit actually from a lot of these agri reforms and their presence in procurement and their wide rural network. Other businesses like hotels and all, I mentioned that they will not be putting in too much money there. So the focus is back in terms of which all areas will be the business drivers of the future. And again, right now, ITC is looked at only as a tobacco company. Somewhere down the road, people will look at it as a FMCG company. So we have to wait for that period. I'm not saying it will happen tomorrow or it will happen in 1 month or 6 months. Many a times one requires patience. So as we have seen in the case of Persistent, that patience sometimes can be very, very long. So we have to buy it on fundamentals and we have to wait for things to improve. This is the margin and ROC profile of ITC. Obviously, in the initial years, uh, it's a losing business because you have to spend a lot of money on brand building and stuff like that. And by now, the investment phase is over, and actually, you are starting to see the returns from the business. And hopefully, going forward, also, they'll be in a position to improve the margin profiles. Uh, there's an interesting talk by a person called Tom Russo. He talks about the capacity to suffer, and I think that's the context, or that's the lens to wear while looking at something like ITC, because they have actually taken a hit to the P&L for about a decade and incubated a lot of other businesses in the new FMCG category, which can be drivers for the future. So one has to actually applaud such efforts rather than beat them down. And again, in a company like Amazon, they are cheered for such long-term thinking, whereas here they seem to be the biggest villains around. So which is kind of surprising. All this, again, this is not a ITC AGM, or this is not a buy report as a sell side that I'm making on ITC. That was not the intention. It's just that so many questions came on ITC that I said best to put out a presentation rather than to answer questions in a fragmented manner. So is buying ITC a mistake? A lot of our investments turn out to be mistakes with the passage of time and benefit of hindsight. So maybe it is a mistake, maybe it is not, meaning time will tell. But it's a very recent purchase, so I don't think we should in 2 or 3 months or 6 months start getting jittery or uh, jump up and down in terms of what is happening to ITC, what is happening to ITC kind of thing. Yeah, so hopefully that covers broadly what I wanted to talk about ITC, and we can get on with rest of the Q&A. Thanks.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.